So that's why I have a hard time taking their numbers too serious.
Doc?
Anything is a gain to them.
I think
yes, ma'am. I can hear you loud and clear.
Thank you very much.
You ready to jump in?
Yes, yes, we are ready.
My opinionated analysis of the new.
Okay, Doc, sorry, I would like to interrupt you anyway because we have to start already. So, hello everyone. So today we are discussing the US ADP non-farm employment change, which will be out in about already 10 minutes from now. And I am here to cover the fundamentals for you, and I hope that Michael will join as soon as, hello Michael, to cover the technicals for you. So, as you can see at the current moment, the forecast stands at 198,000, while the prior figure stood at 217K. So talking a little bit more about the projections and the historical movement of the indicator as well, I would like to remind you that private sector employment increased by 217,000 jobs, in November, according to ADP report. The reading topped market forecast and followed a 196,000 reading in the previous month. This was the strongest gains in the service sector since June. The increase was mainly driven by a rebound in professional business service jobs. Job growth actually remains strong, and the pace of job creation is twice that needed to absorb growth in the working age population. However, it is still premature to argue that the U.S. economy overall is destined to follow. The mild recession that appears to be squeezing manufacturing isn't conspicuous across the country generally. The latest numbers on the consumer spending and payrolls, for instance, suggest that the growth will roll on for the foreseeable future. However, it goes like this anyway. Next, moving to the, some technical issues. Moving forward, as always, we have our experts' opinion, not our, but different experts' opinions from different banks and institutions. And according to their views, as always, we have our Bloomberg survey summary, where the median estimate, let me take the laser, the median estimate stands at 198. Average estimate stands at 196.23 thousand. High estimate is 230,000. Low estimate is 150,000. While the total number of estimates is 39 this time. And here I also would like to mention that, however, the question really is whether incoming figures will paint a darker picture. Some observers think that the weak ISM data argue for no less. If so, that today ADP estimate of U.S. private payroll in December will provide confirmation for the macro bears. Economists, however, are looking for a relatively bullish report. For example, Briefing.com's consensus forecast calls for a monthly rise of 190,000 in today's ADP employment report for December, and that's a modest decline, of course, from the previous month, but it's strong enough to dismiss warnings that the U.S. business cycle is tumbling. Of course, in the wake of the latest ISM data, a major downside surprise for today's ADP release would send a dark signal by casting doubts over expectations for Friday official jobs report, of course. So let's move on to the Dukascopy community member sentiment on the USD versus the Japanese yen. And we can see here on my screen that the traders this time went rather bullish on the matter, with 60.58% bullish votes versus the 39.42 bearish ones. And of course, we have comments from our community members. Most of them were bullish, and here you can see also a bearish comment, though still I don't have any time left, so I will pass the floor to Michael, who will cover the technicals for you. So Michael, go ahead.
Thank you, Kate. Hello once again, everybody. So for the data release, we have the euro-dollar currency pair, and I've chosen the positive surprise trading strategy, despite some of the signs that we might see a weaker figure of the non-farm payrolls today. And of course, we have the sell market. So the sentiment for the given currency pair is quite bearish at 57.78%, with the US dollar being bought in almost a half, 49.05% of all cases, and the euro being sold in 57.37% of all cases. Concerning the pending orders, both in the 50 and 100 pip range, the majority of orders is to sell the euro. In the 50 pip range, it's 69.84%, and in the 100 pip range, it's 67.29%. Other market participants also have mostly bearish sentiments, with OM, the traders, having 53.47% of short positions, and the Saxo group having 59.60% of all traders holding bearish positions. However, the daily FX has a perfectly neutral sentiment. Perfectly neutral sentiment. So moving to the market reaction table, where we see the reactions for the previous 5 data releases of the US ADP and non-farm employment change, with the largest reaction being 55 pips, and the smallest one only 10 pips. But we've seen improvements and some growth in the employment change over the past 3 releases. So there's a good chance we'll see a stronger figure today as well. Based on these reactions, we can calculate the average one, which is approximately 25 pips, and that is the average reaction we could expect today. Based on this reaction, we can set the take profit and stop loss levels accordingly, with the take profit level currently located at 1.0722, and the take profit level the stop loss level located at 1.0772, which is a quite strong resistance, since it is located right on top of the 4-hour R2, bolstering this resistance line. While we don't have actually any other level close to these. Oh my god, I am really sorry. Yeah, on the graph this is supposed to be vice versa. That's my bad. And yeah, the take profit level doesn't have any other support close by except for this possible trend line, which has been supporting the pair not very long, but it could be a possible trend line which is indicating a trend change. So the euro dollar was mostly falling down through most of the last month. Yeah, we have like a minute left. Another sign of a possible rebound is the technical indicators, which are giving us bullish signals in the trending time frame, but mixed signals in the so these two are the most important ones to consider for the specific data release, although they don't always show the correct signs, but at the moment there is a bullish sign in the 10-minute time frame. And we also have the 55 period moving average about to cross the 100 period one, which is also a buy signal. So there might be a hike after all. Also, other markets, according to the Bloomberg survey, some of the forecasts expect, actually most of them expect the employment change figures to be worse than the forecast, with only Commerzbank out of the most common ones expecting the data to be better than expected. And we actually do see a reactions with downside, meaning that the data is better, and it's actually a lot better than anticipated. So the current reaction is actually 25 pips as anticipated, but it broke the take profit level since we've seen a reaction, a slight slump prior to that, before the data was released. So yeah, it actually fell to 1.0714 with a 25 pip reaction to the downside. So if I would have changed the take profit level according to the price just before the release, we would have everything correctly. But nonetheless, we did see a movement to the downside. So I believe that is all from my side, and back to you, Kate.
Thank you very much, Michael. Guys, you can still see the reaction on the screen. Once again, the US ADP employment change was at 257K and revised for 211, still beating the expectations. For this specific date release, I think that's it from our side. Though definitely follow us, stay with us, and meanwhile we would like to pass the floor to Doc, who will continue with his webinar on different things around the world. So please, Doc, you can proceed, and bye.
Good.